Greetings, financial enthusiasts. Welcome to InvestorWeb, your trusted source for all things investment related. Here, we delve into the intriguing world of finance, dissecting complex concepts into simple, digestible insights for you. Today, we're going to unravel a topic that's been buzzing in the investment sphere: high-yield savings accounts. Now, you may be wondering, what is a high-yield savings account? Why is it gaining so much attention? Well, worry not, because we're going to answer all these questions and more. We're here to unravel the intricacies, the benefits, the drawbacks, and everything else you need to know about high-yield savings accounts. So, whether you're a seasoned investor or just dipping your toes into the financial waters, this episode is for you. So, get ready, grab a notepad if you must, because we're about to take a deep dive into the world of high-yield savings accounts. Stay tuned as we dive deep into this fascinating topic. Starting off, you might wonder, what exactly is a high-yield savings account? Well, let's unravel this financial tool together. A high-yield savings account, often abbreviated as hysa, is a type of savings account that earns you a significantly higher interest rate compared to a regular savings account. Think of it as a savings account on steroids. It's designed to supercharge your savings, allowing you to accumulate wealth more quickly and effortlessly. The key to its high-yielding nature lies in its interest rate. Banks and other financial institutions offer these types of accounts, and they can afford to pay higher interest rates because they use the funds deposited into these accounts to lend to others. In essence, it's a win-win situation. The banks earn money from the loans they provide, and you earn money from the interest accrued on your account. So, how does a high-yield savings account differ from a regular savings account? The primary difference lies in the interest rate. A regular savings account offers a lower interest rate, often less than 1%. On the other hand, a high-yield savings account can offer rates that are 20 to 25 times higher. This means that if you deposit the same amount of money into both accounts, you'll see a more significant growth in a high-yield savings account over the same period. Moreover, high-yield savings accounts are typically offered by online banks. By cutting out the overhead costs associated with brick-and-mortar establishments, these online institutions can afford to offer higher interest rates. However, it's important to note that while high-yield savings accounts offer higher interest rates, they may come with certain restrictions, like a minimum balance requirement or limits on the number of transactions per month. It's essential to consider these factors when choosing the right high-yield savings account for you. Now that we understand what a high-yield savings account is, let's delve into how it works. Stay tuned as we break down the nitty-gritty of high-yield savings accounts in the next segment. Understanding how a high-yield savings account operates is crucial to maximize its benefits. Let's delve into the mechanics of this financial instrument. The first key feature of a high-yield savings account is, as the name suggests, its high interest rate. Unlike traditional savings accounts, a high-yield savings account offers an interest rate that's significantly above the national average. This elevated rate is what allows your money to grow at a faster pace over time. Now let's talk about compounding. Compounding is a process where the interest you earn on your savings is reinvested to generate even more interest. It's like a snowball effect. Your savings grow exponentially over time, not just linearly. Most high-yield savings accounts compound interest on a daily or monthly basis, so the more frequently the interest is compounded, the faster your savings grow. Lastly, let's discuss liquidity. Liquidity refers to how quickly you can access your funds. High-yield savings accounts generally offer high liquidity. You can withdraw or transfer money relatively quickly, often within a few business days. However, it's worth noting that federal law limits certain types of withdrawals and transfers from these accounts to 6 per statement cycle. This limitation encourages savers to let their money sit and grow rather than frequently dipping into their savings. So, how do these features affect the growth of your savings? Well, the high interest rate allows your money to grow at an accelerated pace. The compounding effect further boosts this growth by reinvesting your earned interest. And the high liquidity ensures that your money is there when you need it, while also promoting a habit of saving. In essence, a high-yield savings account is a financial tool that uses the power of a high interest rate, compounding, and liquidity to grow your savings at a rapid pace, while still providing you with easy access to your funds when needed. With a clear understanding of how a high-yield savings account functions, we can now explore its benefits and potential drawbacks. Like any financial instrument, high-yield savings accounts have their pros and cons. Let's start with the advantages. First off, one of the primary benefits of a high-yield savings account is, as the name suggests, the higher interest rate. Traditional savings accounts often offer minimal interest rates, barely keeping up with inflation. However, high-yield savings accounts offer significantly higher rates, potentially allowing your money to grow at a much faster pace. Secondly, high-yield savings accounts provide a great deal of flexibility. This type of account is not locked in like a certificate of deposit, which means you can deposit or withdraw funds at any time without penalty. This gives you the freedom to manage your money as you see fit, making high-yield savings accounts an excellent option for emergency funds or short-term savings goals. Now, on to the drawbacks. One potential downside to consider is the minimum balance requirement. Some high-yield savings accounts require you to maintain a certain balance to earn the advertised interest rate. If your balance falls below this threshold, you may earn a lower rate, or in some cases, be hit with a fee. Another potential disadvantage is the limit on transactions. Federal regulations limit certain types of withdrawals and transfers from savings accounts to 6 per statement cycle. If you exceed this limit, you may face a fee or even have your account converted into a checking account. Finally, it's crucial to remember that while the interest rates on high-yield savings accounts are indeed higher, they are still subject to change. Banks can adjust these rates at any time, which means the attractive rate you see today might not be the same down the line. Weighing the pros and cons allows us to make informed decisions about whether a high-yield savings account is right for us. So, who should consider opening a high-yield savings account? Well, various types of individuals could find this type of account beneficial. Let's delve into who these individuals might be. Firstly, if you have a substantial amount of savings, a high-yield savings account could be an excellent tool for you. These accounts often offer significantly higher interest rates than traditional savings accounts, meaning your money can grow at a quicker pace. It's like having a garden where your money is the seed and the high-yield savings account is the fertile soil, providing the nutrients for your money to blossom. Then we have those who are seeking a safe place to grow their money. If the thought of investing in the stock market makes you break out in a cold sweat, a high-yield savings account could be your haven. It offers a balance of safety and growth, letting your money flourish without exposing it to the volatile ups and downs of the market. And what about those planning for big future expenses? Perhaps you're saving for a dream vacation, a new car, or your child's college education. With the power of compounding interest in a high-yield savings account, you can reach those goals quicker. It's like having a friendly financial ally by your side, helping you move forward towards your dreams. But remember, high-yield savings accounts aren't a one-size-fits-all solution. They're a tool, and like any tool, they work best when used appropriately. It's about understanding your financial situation, your goals, and your comfort level with risk. So, whether you're a savvy saver, a cautious investor, or a future planner, a high-yield savings account could be a beneficial part of your financial strategy. It's about making your money work harder for you so you can focus on what matters most, living your life. Now, you should have a clear picture of whether a high-yield savings account suits your financial goals. We've covered a lot today about high-yield savings accounts. We've unraveled what they are, how they work, their pros and cons, and who should consider them. Remember, these accounts offer a higher interest rate and can be a valuable tool in your investment arsenal. They help your money work harder for you, and that's what we all want, isn't it? InvestorWeb is here to help you navigate the world of finance and investment. We aim to provide you with the knowledge and tools to make informed financial decisions. Whether you're just starting out or are an experienced investor, there's always something new to learn. In a world where financial literacy is more important than ever, staying informed is key. Don't let your money sit idle, make it work for you. Thank you for joining us on InvestorWeb. Don't forget to subscribe for more insightful investment content. Until next time, keep investing wisely.